If the dizzying rise of cryptocurrencies seemed too good to be true, well, Bitcoin and its ilk have lost 74% of their value since reaching dizzying heights just 1 year ago. What was billed as the insurgent innovation that would decentralize and democratize global finance has instead proven an unregulated mess, prey to money laundering and scams. Now comes a real reckoning with the collapse of a company that as recently as September was valued at $32 billion. In 3 years, how did FTX make a now 30-year-old MIT physics major come trader, a billionaire seen as an oracle of what's called ethical altruism and the concept of reinvesting profits for good? It turns out now that his Bahamas-based company didn't even know how to manage its books. We'll ask about the rise and fall of Sam Bankman-Fried. And what's next for FTX, the billions lost, and the push to regulate this new frontier of finance? Do cryptocurrencies even have a future? More broadly, what does this tale of boom and bust say about human nature in these times of globalization? Today in the France 24 debate, we're asking, could crypto turn out to be the scam of this century? And joining us from London, Susanna Streeter, Senior Markets Analyst at Hargreaves Lansdown. Thank you so much for joining us.
Great to be on the program.
Faustine Ferret is president of the French lobbying and industry group ADAN, the Association for the Development of Digital Assets. Did I translate that correctly? Okay, thank you for joining us. Alexandre Stashtenko, co-founder of co-founder of Blockchain Partner, and you're with the auditing firm KPMG today, and you're in charge of analyzing all the crypto things.
I'm in charge of the crypto business unit, so that means mostly strategy and what's at stake for financial players. Yeah, so thank you for inviting me.
Thank you. His doctoral thesis probes the international response to financial crises, plural, throughout history. Joining us from Toronto, William O'Connell of the Department of Political Science at the University of Toronto. Thanks for being with us.
Thank you for having me.
The France 24 debate, where you can join the conversation on Facebook and Twitter, #F24debate. Susanna, can I begin with you? Simple question. What happened at FTX?
It seemed to be a house of cards, and it has appeared to be certainly that has collapsed, because it's, as far as the liquidators are concerned, there was really no oversight, no governance. There was funds which moved effectively between companies from FTX for me to research. There was no proper governance in place to stop that happening. And really, the way that the company operated fell well short than the expectations that you would have of a financial house. And really what's happened is, as other ructions have taken place within the crypto world, there's been a domino fall effect, which has brought down FTX with it, even though it had 1 million users who are likely to have lost all the money that they put into FTX. That couldn't save it, because their funds, it seems, were misappropriated to put into other businesses that were run by the founder. And really, it's all just come tumbling down.
Did you see this coming, Alexandre Stachenko?
Well, it's hard to say. Let's say it's easy to say after that I could have seen that coming, but the truth is that most people had put their trust into the company, but it's actually a massive fraud scandal. So it's not really crypto related. In the end, it could have been selling shoes, it could have been selling hats or whatever. It's just someone just taking their client's asset and doing fraud with it. So it's hard to say that we could have seen this coming, but most professionals in the sector were not actually using the platform, because especially from Europe, from a European perspective, we have, especially in France, we already have regulation in place, and so we would not recommend anyone to go there. So I do not have any of my clients on that platform. I'm not personally on that platform. So I would not say I would have seen that coming, but clearly that was not, the platform itself was not the best platform that you could take out there.
All right, when new administrators were brought in last week, they found there was $1 billion missing, and we're not quite sure yet if was it rogue transactions or a hack that's described as an inside job. But what's interesting in this story, and I'll put it to you, Faustine Fleuret, is that you had FTX, a crypto exchange, and next to it there was an investment wing called Alameda, and basically they took the money from one to play the market with the other, and none of that is that illegal or is that unregulated? That's my question.
So the regulation behind FTX is quite complex and actually quite confused, and this is because of the state of play of regulation in the United States and in other regions of the world, and we don't have this same situation in France and Europe, where we have built regulation for years. In France, we already have a regulation for crypto asset markets that is in place for more than 3 years, and we are currently implementing the right framework for those markets in Europe, and it will be in implementation in few years.
So if you own a crypto exchange in France, can you then as well start an investment fund?
When you are targeting the French public with crypto asset services like the custody of clients, of assets of clients, like the exchange of crypto assets, you must be registered with the French financial regulators, and you must comply with some EU regulations that are actually not crypto specific, that other financial entities must comply with. So banks, insurance companies, and crypto asset markets in France must comply with the fifth directives in terms of fighting against the terrorism and anti-money laundering. So if you are
but can you do like Alameda Research? It not only did it trade, but it made trades on the FTX platform. So are you allowed to do that? That's my question. Would you be allowed to do that with a French cryptocurrency?
You would not. No, you would not. And we have today more than 50 providers that are registered in France and supervised by the French financial regulators, so who would not be able to do so.
William O'Connell, it's just the loose regulation. Basically, that's you wouldn't see that in Europe, is what my guests here in the studio are saying. Your thoughts on that?
Yeah, so I think what's important to note in the FTX case is that there was obviously instances of fraud, but at its core, this institution was essentially operating like a bank. So if you read the terms and conditions on opening an FTX account, you would see that your deposits in US dollars, in euros, were going to be held in a non-segregated account. What that means is that your money would be pooled with the other customers who were depositing money into FTX, and that pool of money would be used by FTX to make loans to its own hedge funds, to other cryptocurrency firms. And this is essentially what banks do. And as we know from 2008 and from other financial crises, that entails risks. And sometimes these banks and these companies go bust because they make bad loans. They get involved with other companies that go bankrupt. And the difference in this case, unlike regular banks, is that this was occurring in an environment where there was not really any meaningful regulation whatsoever. There were very weak disclosure requirements. And as we're now learning, FTX wasn't even keeping track of its own transactions internally, let alone providing that information to its customers.
Is that just a problem over in the U.S., in North America, or is that global? The rules on what you disclose or not? Because you heard there what Faustine said about how in France that wouldn't be possible.
Yeah, so part of the issue is that in FTX's case, they were based in the Bahamas, and many of these other cryptocurrency firms are based in countries with relatively minimal financial regulations. And in terms of digital currency generally, there are difficulties in determining where particular assets are located at any particular point in time. So it becomes quite difficult for regulators to provide blockages and to make it difficult for customers in particular countries to have or to bar access to these platforms. So yes, perhaps you would not be allowed to do this in France, but that doesn't necessarily mean if you're a French individual that you wouldn't be able to access this platform and use their services, and that the platform wouldn't be able to operate in France through using VPNs or through other ways to try to circumvent regulation.
Well, let's talk about the most famous one, Bitcoin. Where is it domiciled?
So in terms of Bitcoin, that's something that's traded on some of these exchange platforms. So you have cryptocurrencies like Bitcoin, like Ethereum, that exist as assets within the space. And companies like FTX or Coinbase or Crypto.com provide platforms through which customers can create accounts and trade these assets between them. And so you have regulation on the assets themselves. Are these going to be treated similar to bonds or to stocks? And then you have regulation on the platforms, right? Are we going to treat these as stockbrokers? Are we going to treat them as banks? Are we going to treat them like stock exchanges? And in some cases, like FTX, you have companies that provide exchanges and that also provide the assets. And that's where things get tricky in terms of accounting, because some of their accounting might be accounted for in their own cryptocurrency. And that creates serious questions about the actual value of the underlying assets that they hold and what the customers are trading in.
Yeah, you see, we're confused. Whether it's an asset, whether it's an exchange, it's confusing, and it must be confusing for ordinary people. What is interesting to note, and I'll put it to you, Alexander Statenshko, is that crypto reached dizzying heights at the end of what's been a long cycle of low interest rates and easy money, and there you see the graph with it's lost 74% of its value in the past year. And you have to wonder, when you look at that chart and you look at the graph, it's impressive. Is this a bubble that's bursting?
Well, I've been in the space for quite a few years now, and I think it's probably like the 100th time it's supposed to be a bubble that's bursting. No, Bitcoin is not dead, just like it wasn't dead last year and it wasn't dead 5 years ago. It's still there, and the graph basically looks like the chart also of companies like Amazon, for example, when they bursted out at the dot-com bubble in 2001. So it's just the price. The price is basically the noise, but it makes people actually forget what's the actual benefit from those cryptocurrencies, and especially Bitcoin, because one underlying thing that we can learn from this stuff is that there's Bitcoin and then there's the other crypto. Most are probably scams. There are some that are interesting projects, but Bitcoin, it stands very apart because it provides something that's very new and you can't do in the traditional finance, which is owning. You can't own anything in the traditional finance because anything you own is actually owned by someone for you. There's a bank holding accounts for you and in the digital world. Whereas in the physical world, if you have cash, you have it yourself. You can have it at your home, you can have it in a safe, you can have it wherever you want. In the digital world, it's not possible. Anything you own is actually a liability. Bitcoin changes that. It's the first cryptocurrency. It's also the biggest one, the most ancient.
But I'm sorry, it sounds like fiction.
It's not fiction. I own Bitcoin.
Well, just like a dollar bill is fiction. Or,
yeah. To that end, yeah.
But we agree on what a dollar bill is worth.
Yeah, well, it's enforced by American Army, basically. But yeah, we agree on the value of a dollar as a commodity, as a medium of exchange. And Bitcoin is not short of that. It's a collective illusion that people agree or not to use as a medium of exchange. And of course, something that's created out of nowhere, because it's an anonymous guy who said, okay, it's cool to go, there's Bitcoin, here's the white paper. Coming out of nowhere, it's hard to get a consensus, a worldwide consensus about something that's very so new, and so it's taken 13 years since the inception of Bitcoin, and now we have something around 300 million users of cryptocurrency. That's a lot. That's more than most currencies on Earth, and it's not dead, just like it wasn't dead 2 years ago, and probably it will still continue to live, because the fundamental advantage of using Bitcoin, which is owning stuff and transacting without an intermediary, is still there.
All right, Susanna Streeter.
I just have to pick up on that point. I mean, talk about it as a means of exchange. How can it be a means of exchange, a reliable one, when the price is so volatile? And you compare it to the stock of Amazon during the dot-com bubble. I'm looking at the chart right now. It certainly didn't behave like that. And certainly if you're investing in a company, you're actually investing in an organization that produces something tangible. There are employees, there is a value, there is a wealth creation within society. And that's partly what you're investing in and the expectations of growth. The problem is that we have with cryptocurrencies is that there are so many of them. Bitcoin may be the best known, and the one that is held, as you say, by more people. But really, it's like backing a horse in a race, or it's like pinning the tail on a donkey blindfold. You really don't know which one of these cryptocurrencies is going to survive into the future, because the use case of crypto is yet unproven. And this is the core issue at the heart of all of this, and why it does appear to be like a house of cards. Now, the problem that regulators have is that they start regulating crypto, it adds legitimacy to these coins and tokens, and many of them really arguably don't have much legitimacy. They have been created as vehicles for those founders to make money on a wave of speculation rather than actually having an underlying use case. And this is the problem at the heart of this. Certainly, some coins will survive in the crypto world. We just don't know which ones yet. And if you're willing to bet money that you simply can't afford to lose, that is a crazy way of operating.
Before I get the reaction from the other panelists, let's listen. Last December, I asked the question earlier about whether or not this was a bubble. The FTX founder, Sam Bankman-Fried, was asked by a U.S. congressional panel whether this was a bubble.
One of the really innovative properties of cryptocurrency markets are 24/7 risk monitoring engines. We do not have overnight risk or weekend risk or holiday risk in the same way traditional assets do, which allow risk monitoring and de-risking of positions in real time to help mitigate volatility. We've been operating for a number of years with billions of dollars of open interest. We've never had customer losses, clawbacks, or anything like that, even going through periods of large movements in both directions. We store collateral from our users in a way which is not always done in the traditional financial ecosystem to backstop positions.
Safe as houses. William O'Connell, that testimony again was from December of 2021. Your reaction to that?
Well, I think the idea of being safe as houses is perhaps directly contradicted by our experience in 2008, when we learned that houses, in fact, are not always particularly safe. But I think in this context, it's pretty clear, for one, that Sam Bankman-Fried lied about a lot of this, a lot of these, collateral, a lot of these transactions, and that they really had no meaningful risk management procedures at all. But I wanted to come back to what one of my colleagues had mentioned about some of the use cases of Bitcoin, which is that, well, yes, Bitcoin can kind of mimic the security of cash and ownership. In order to be able to scale that up into using it for day-to-day transactions, there needs to be infrastructure. And you need to actually have those intermediaries in order to be able to make the economy function, right? There's a reason why we don't transact in cash for the vast majority of our transactions, because it's incredibly inconvenient. But Bitcoin or other cryptocurrencies create additional hurdles to that. They require an internet connection. They require a more sophisticated understanding of technology that, frankly, most people are not willing or able to achieve. And it requires an incredible degree of computing power. Most Bitcoin and other cryptocurrencies are mined in countries with relatively lax environmental standards, and it takes up a huge amount of energy consumption in a way that traditional finance does not. So there are pretty significant downsides, and I would argue some pretty serious questions about whether Bitcoin could ever be scaled up to be able to use for transactions in ways that that cash and the regular financial system now do quite well. So,
Faustine Fleuret, you go to a cocktail party. The first question people must ask you is, what's cryptocurrency? They're still asking the question, even though we've been talking about this, and Suzanne has been on before. She can testify. I was asking this question the last time we were on, and people around me, even in the newsroom, are still asking that question.
What are crypto assets? Crypto assets can be actually many things, but at the beginning it's Bitcoin, and Bitcoin illustrates what are all the core advantages of crypto assets. And first is to be able to be independent from the centralized actors, and we have this news today that showed that the failure of FTX is a failure about of centralized actors. So Bitcoin and
Wait,
decentralization.
when you say it's the fault of centralized actors, what do you mean?
Because here technological foundations and crypto assets are not at stake. It's not the reason why we have the failure today of FTX. It's about mismanagement. It's about the fault of one actor, one centralized actor.
Isn't it William's point, though, that this is super murky, understanding what it is? We understand what a currency is. We understand what shares in a company are. But this is sort of in this gray zone. We're not quite sure what it is.
So crypto assets, it's about an asset that is issued and that is exchanged on blockchain networks. And behind blockchain networks, you have an infrastructure that allows for decentralization, for transparency, for programmability. So many things that today can help to move from a world where the confidence and the trust is in
Why is
intermediaries.
decentralized more transparent?
Because the trust is no more in intermediaries, but the trust in about the code and the blockchain and the transparency of markets. Where today in more centralized and traditional markets, you don't have this transparency and there's this ability to see all the transactions online. You don't have the ability to trace what happened and what will happen. So actually it's about a new world where you can exchange value where it was not possible before. When you say exchange value,
do you mean exchanging like a currency, or do you mean exchanging like an asset, a stock, an IOU for, I don't know, sacks of potatoes?
You can have very different crypto assets. So for example, you have tokenized stocks, tokenized debt. So it's possible, but you have also new assets.
Or is it some kind of investment?
So you have cryptocurrencies that are part of crypto assets. You have cryptocurrencies like Bitcoin, like Ethers, but you have also other use cases where assets have different finalities, different use cases. But at the very beginning with Bitcoin, with Ether after, you are about creating a new medium of exchange, a new currency, because the Bitcoin network and the Ethereum network are built on those cryptocurrencies that can help allow the network to function,
why does understanding the code make it more transparent?
It's not about understanding the code, but you can see all the transactions online. You have a register that if you are on the internet, you can see, you can access wherever you are simply because of an internet connection. So all the transactions that you are executing on blockchain, Bitcoin, Ethereum, whatever, they will be registered permanently in this register, and you will be able to trace them forever.
Susanna Streeter, your thoughts on this?
Yes, I mean, obviously, the principles are there. Blockchain technology is extremely valuable, but I don't think it's so valuable in terms of currencies. It's actually how you can use that technology, the blockchain technology, smart contracts, decentralized finance, and then apply that technology to so many other aspects of the world in which we live, from, say, for example, house transactions to digital identities, and actually, say, for example, supply chains. And then you could track on this kind of digital ledger exactly where products and raw materials may be in parts of the world, and that can't be changed. So I think it's very exciting, the blockchain technology. The problem is this whole idea of cryptocurrencies, that they are the way forward for individuals to exchange money. And I think it's rife with so many problems. Now, there is the argument there that actually it's more transparent, but on lots of these blockchains upon which these cryptocurrencies have been built, well, actually they're private blockchains, and then that can lead to more fraud. It can lead to much more dealing on kind of in the black market. And so actually it's not necessarily more transparent at all. It can be really a forum for more criminality. So it really does depend on how this blockchain technology is being used. And I just don't think that the use case is there really for individual speculators to get involved, because they think that it's going to be the way that we will be exchanging our money in the future. We may change to central bank digital currencies or currencies backed by stable coin and backed by fiat currencies, something like the euro, the dollar, the pound. But I simply don't believe that we really will be exchanging and buying cups of coffee with Bitcoin.
That's what they tried to do, Alexander Stanchko, in El Salvador.
Yeah.
How's that going?
Well, it's going better than the CBDC in Nigeria, if we want to talk about CBDC. Just to go back on some things that we're saying.
But it's going better than in Nigeria, granted,
Yeah.
but it's not going well.
Well, you mean you have 20% of the population using Bitcoin, so that's the official figure. You have 25% of the people who have a bank account in El Salvador. So that means that in 1 year, something that's supported by no one is making the same progress as the banking system in 200 years. So it's framed as a failure, and certainly nothing is perfect, and probably nothing is perfect. But I'm saying you don't expect to change the monetary system in a year. Just to take the example of France, of Europe, we've introduced the euro, and 10 years later, you could still use your previous currency, because changing the monetary system is not something you do in a year. But just to go back on some points that were made, there's no use case for Bitcoin. If you can tell me one way in the traditional finance, like I said, international transaction on a Sunday at 8 p.m., to the other end of the world, transaction in 10 minutes, and it cost me $1, whatever the amount. If you can tell me one thing that can do that in traditional finance, that maybe there is no use case. But the problem is that you can't do that. Because if you do that, you're going to wait for 5 days, and you're going to take probably between 5 and 10% of the transaction, and your counterpart has to have a bank account, which is not the case for half of the world population. So there is a lot of use cases for Bitcoin. And just also to come back on something else, saying there's Bitcoin, but that's not a use case, and then there's blockchain, and that's fascinating. Well, I think that's very funny, because most people are, there is not a single blockchain without crypto project that has €1 of return on investment over the past 8 years, not one. And there's been hundreds of millions of dollars poured into experiments all over the world. Just as Australian Stock Exchange, for example, just stopped last week their experiment. Okay, but we are still in the process of saying, we should wait for a few more years, maybe. Bitcoin is 13 years old. Last year, it handled 13,000 billions of dollars of transaction, which is more than Visa. So here you have something that transacts more than Visa, that has more daily transactions than Fedwire in the US, for example, that is used as an official currency in a country, whether it be Salvador or another one maybe. But it's framed as a failure because one guy made a fraud on a specific platform. And then you have blockchain without crypto. There is not a single success in 8 years. And it's supposed to be the Holy Grail. So that's very funny to me to hear that.
Let me bring you in, William O'Connell, on this. Your thoughts on what's a failure and what's a success here?
Yeah, so I think the first thing I would push back on is that this is not simply one specific failure of one specific individual. Earlier in the summer, the Celsius Network and Voyager Digital both were relatively large, not as large as FTX, but relatively large cryptocurrency exchanges that were operating very, very similarly to FTX, just on a slightly smaller scale. And those did collapse. They filed for bankruptcy, and their customers also lost millions of dollars. So this is certainly not an isolated incident. And there are plenty of cryptocurrency exchanges that are still operating that have very similar business models. So this is certainly not an isolated incident. I would also argue that there's a reason why it's countries like El Salvador that are going in on using Bitcoin for transactions. In El Salvador's case, this is a country that has struggled for a very, very long time with organized crime, with corruption, where, if we want to talk about use cases, that is one of them for Bitcoin is organized crime, as we've discussed. But I think more generally, if we're talking about the future of decentralized finance, I think it's quite telling that many of the top individuals in this space have now called for setting up emergency liquidity procedures, creating kinds of pools of money to help embattled cryptocurrency firms when they start to struggle, to deal with some of the liquidity issues that tend to occur when customers begin to pull their money out. And this sounds quite a bit like the function that central banks have in the regular economy. And it was these types of functions, these types of interventions that stopped the bleeding in 2008. But what does this say about the future of decentralized finance if the key players in this are now starting to look at this crisis and start to think about solutions that start to look pretty much like the regular financial system? In effect, they're talking about centralizing it. So I'm not sure what that has to say about the possible use cases of decentralized finance if that decentralization is part of why we're in this mess in the first place.
Alexander Statchenko, the problems at FTX, they began, didn't they, when they decided to bail out two other firms that were teetering?
Probably not. They began when they started frauding. So that's even before, and
but that's when they were exposed, is what I'm saying.
Not necessarily. We're seeing now, and the liquidator gives us some news every day on that. We're seeing that they're taking customers' funds to basically just buy real estate. So that's not anything related to any bet or any crypto. You're just taking your clients' money to buy real estate in the Bahamas. So that's why I'm saying the company could have been selling shoes. That's still illegal to do that. So there's nothing about Bitcoin in taking your client asset to buy real estate. That's what I'm saying. And as Faustina said, Bitcoin went without interruption. It has not been interrupted in the whole process. It's still going on. I'm still making transactions every day. And there is one bad player, just like there was Lehman Brothers. Did we think it was the fault of the dollar and we abandoned the dollar because Lehman Brothers' fault? No, because these are two separate things. So did we stop?
But Lehman Brothers was not the one bad player. We know that the financial crisis was because a lightly regulated or unregulated market led to the fact that you had a property collapse, basically.
Yeah, but well, if you take a step back, the reason why we need so much regulation is that William was talking earlier about the fact that we don't use cash because it's not convenient. True, it's not convenient because it's not digital. Everything is digital, so if you have the one thing that's physical, it's not convenient. And the reason why we can't have cash online is because the internet does not know how to handle value. And so in order to get money in the digital space, what we've been doing in the past 50 years is that we have had trusted third parties everywhere. I'm always referring to this figure for France, but I think it's the same around the world. Just 50 years ago, you only had like below 10% of people had bank accounts. So that's only 50 years ago. And now it's more than 99%. So this whole process was because we want cash to be digital, but technologically, with internet, you can't do that. So the process was to digitalize cash by introducing trusted third party and having everyone have a bank account. What Bitcoin offers is an alternative, and it's the ability to have digital cash without this trusted third party. But do we expect an industry to have the same?
But isn't that the same as now with you have in West Africa or other places you
still have an intermediary.
You can do mobile payments with your telephone.
You still have an intermediary to trust.
And can those people afford to buy a Bitcoin?
Well, they can, because in Nigeria, we've been talking about that. They've been trying to introduce their CBDC, and after a year and a half, that's only 0.5% adoption. On the other hand, probably between 30 and 40% of Nigerians own cryptocurrency, so they probably know better.
Susanna Streeter?
Well, I'd just like to say there are many new players within the digital payments and remittances space where it is much faster than using traditional bank accounts already. Often you don't need a bank account. You can receive money into those electronic accounts already. So there already have been pretty fast movements within remittances and within the whole industry without actually having to go through a crypto exchange and a very volatile digital cryptocurrency to do just that. I think the problem is the rules of the crypto game have not been drawn up yet. We don't know what kind of playing field we're on, and we don't know what's going to happen in the future, and that is the danger.
And when you say the rules, you mean the global rules?
The global rules, national rules, they simply haven't been properly drawn up. So you're kind of really operating in the crypto Wild West right now. It's very hard to know you're still speculating ultimately on which cryptocurrencies will survive into the future. And that is okay if you have money you can afford to lose. But the problem is, during the pandemic, 14% of people who held cryptocurrencies in the UK had borrowed money to do just that. And certainly if you got Bitcoin plunging by 80% this year, this is a very volatile cryptocurrency to hold, and actually lots of people have had their fingers seriously burnt. So that is really what I'm warning people to do, is that actually if you want to dabble in this space, only do it with money you can afford to lose.
Faustine Fleuret, you agree? I mean, if it's lost 80%, right, it's a risky gamble.
I wanted to react because the state of play of regulation is much more complex, and actually there are some jurisdictions where there is no rules or really unclear rules, like in North America, for example. But if we take France and Europe, in France we have a regulation for a few years. In Europe it will be implemented in 2024-25. So we have the set of rules that is really similar to what we ask financial institutions to comply with, that will be applied to crypto actors in the coming years in Europe. But of course, it's not the same situation in other jurisdictions. And the problem of regulatory fragmentation is that you can have the most credible and serious actors and the most regulated companies in Europe, for instance. If we have other jurisdictions where those rules do not exist or they are lacunary, we will let the possibility to have other frauds and other actors that will be able to develop and to be more competitive than those companies that will need to comply with rules and that will implement costs to be compliant with those rules, that will be less competitive, and at the same time that we don't promote as virtuous actors. So there is a difference to make within the sector.
We live in a globalized world, and the point is that you here, they don't. FTX didn't follow French regulation, but people can still use its services.
Yes, and that's a problem because we will implement a new regulation, but we will let foreign actors to provide services to EU citizens.
Will that regulation work without the United States, which holds the world's largest currency, the dollar?
There is a very big difference in the progress that we made in Europe and in the US regarding regulation. So that's why there is a need for US regulation to exist and to be clear. And we could hear the calls from some CEOs of US platforms saying that the regulation was so unclear that it was necessary to find some places where it's more clear, but we are calling for international harmonization of regulation within the crypto industry.
We heard that call also being made by Sam Bankman-Fried. He made it quite a bit, and he's got a nemesis. By the way, this story includes a nemesis to our anti-hero. He's a 45-year-old Chinese-Canadian CEO of rival Binance. His name is Changpeng Zhao, aka CZ. Here's his response when he's asked how much regulation is needed.
The regulators do have a role. We do need slightly more. We do need to increase the clarity of regulations and the sophistication of regulations in the crypto space.
Slightly more regulation, William O'Connell.
Yeah, so I think the simplest way to put it is that if it operates like a bank, if it looks like a bank, it acts like a bank, then you need to regulate it like a bank. And what that means is that these companies, if they're going to hold client assets in non-segregated accounts, then in the jurisdictions in which they operate, they need bank charters, they need to be subject to capital requirements, they need to be subject to leverage ratio requirements, and they need to have rigorous public reporting that makes it clear to their customers, to their shareholders, what exactly they're up to. And it's pretty clear in the FTX case that they weren't subject to any of those things in any of the jurisdictions that they were operating in. The other approach, perhaps, is banning them from doing this, right? So you might say have these platforms hold assets in segregated accounts where, if I have an account with one of these companies, those assets are held in my name in my legal ownership, they're not used to make loans. And in that way, if the company goes bankrupt, I can move those assets to another platform. So there is room for international harmonization in this space. Existing regulators have the tools to designate crypto as securities, to regulate it like the regular financial system. We have the tools. It's just, in my view, a matter of willingness to implement. And that seems to be more the case in Europe than in the United States at this point.
More in Europe than the United States. Susanna Streeter, again, we're coming off this long period where money was cheap, right? We had very low interest rates. Now that money's not so cheap, is this problem going to solve itself, or you still need regulation?
Well, certainly the reason why so many cryptocurrencies set off on this kind of roller coaster ride during the pandemic is because people have built up savings and they wanted to invest it somewhere. And because of that build up, a lot of it went into crypto. And because money was so cheap, that really fueled the crypto wave. So certainly I do think that because interest rates are going up all over the place, and certainly Bitcoin hasn't proven to be an inflation hedge as many predicted it would be. In fact, it's fallen back as interest rates have risen to try and put a lid on inflation. But anyway, what I do think will evolve is a real attempt by regulators to stop any kind of contagion across the wider financial sector. And the Bank for International Settlements, the kind of central bank of central banks, effectively did recommend the Basel Committee that actually there should be perhaps some kind of rules whereby if institutions are buying up big chunks of crypto, they should perhaps put 100% of capital away as reserve to make sure that if there are losses that are incurred, it doesn't then trip up a wider financial system and cause even more of a domino effect. Because at the moment, these losses really have been ring-fenced, we hope, from the wider financial system. What could happen in the future, though, if these checks and controls aren't put in place, is actually it could lead to a much bigger collapse of a house of cards.
Now, Sam Bankman-Fried's not been seen in public since he filed for bankruptcy earlier this month. One can only presume he's still living in that gated community in the Bahamas, a tax haven. Its government sees no evil on its watch. This is what the Prime Minister said. Based on the analysis and understanding of the FTX liquidity crisis to date, we have not identified any deficiencies in our regulatory framework that could have avoided this. Alexandre Stachenko, your reaction to that?
Well, then either there's a problem with what they are seeing, or either there's a problem with the regulatory framework. Because if you can have a $50 billion massive fraud and there's no problem with regulation, then there's a problem in the regulation itself, probably. I think there are problems. As I said, it's mostly linked to the corporation and to that particular person and particular set of companies.
It's an outlier, you're saying?
Yeah, well, they are most in this. Just to go back to what Faustine was saying, in Europe, and especially in France, we've been calling for regulation, especially on centralized player, because centralized players, they hold their assets for their clients, and so they should be held accountable for that. And yes, they should have segregated accounts. I agree with William on that. They should, have the same restriction if they do the same thing, with one just little difference, that they do not issue credit. So they're not banks in that sense. They don't create euro or dollar or money itself. But yes, they should be regulated. But that
they
doesn't
do encourage decentralized finance, as Faustine was saying.
That's a second thing. But just to finish on the first point, what Faustine was saying, which is very true, is that you can have the best framework in Europe, which we currently have because we are the only ones going that way. It just means that you're going to have no company in Europe, and they still can operate in the Bahamas. So the only thing that we should be trying to do right now is harmonization, because without harmonization, you're going to have places where you can operate from offshore places without regulation. And concerning decentralized finance, it has loads of problems. And basically, if you look at the past year, there has been a hack like every month nearly, because it's very experimental. And so, yes, don't put all your eggs in the same basket. And basically, you have to understand the risk. But here in this specific case, it's not its fault. And on the contrary, it's working pretty well, because all the liquidation process, all the liquidity, everything is transparent. For example, in the Alameda case, we found out that there was a specific line of code at FTX that prevented them from getting liquidated when they should have been, which does not happen in decentralized finance because basically everything would have been public. So it has its share of problems, but let's not confuse things.
William O'Connell, we're out of time. One final word on this.
I suppose what I would point out is that part of the reason why these centralized platforms get so much play is because of the convenience of using them. And so if we go back to these use cases, trying to decentralize this system really makes it incredibly difficult for everyday people to transact. And I think probably calls into question the future of Bitcoin and other cryptocurrencies as a viable experiment.
So much more to talk about. We could go another hour. I want to thank you, William O'Connell, for being with us from Toronto, Susanna Streeter in London. I also want to thank Faustine Fleuret, Alexandre Stachenko. Thank you for being with us here in the France 24 debate.